Ladies and gentlemen, on behalf of Insurance Europe, it is my great pleasure to address you today. Your conference comes at an important moment as environmental, social and governance, short ESG issues, are reshaping the insurance industry. I would therefore like to firstly briefly outline the contribution of our sector to sustainability. Secondly, reflect on the situation today. And finally, focus on what should be done next to address some of the challenges our industry faces. As you know, European insurers strongly support the transition to a more sustainable society and economy. And ESG considerations and strategies are an important part of this journey. It is not only an issue of regulation and compliance, but an opportunity to demonstrate how our industry is contributing to managing sustainability risk and to illustrate its leadership role in creating a more sustainable future. Given their role as both risk underwriters and investors, insurers can make an important contribution in various ways. Firstly, their protection products help individuals and businesses cope with the financial impact from weather events which are becoming more extreme due to climate change. Secondly, as underwriters, insurers can use their underwriting policies to inform and incentivize their policyholders in supporting the transition to more sustainable practices. Thirdly, insurers can also assist policymakers in guiding society towards better adaptation practices with tools such as risk zoning and mapping and land use planning. And as Europe's largest institutional investors, insurers are helping finance the transition. Many insurers screen their investments using ESG criteria and have made ambitious sustainable investment commitments. Insurers are significant investors in green, social, and sustainability bonds. They finance renewable energy projects, sustainable water management, energy efficient and affordable housing, and other work supporting the UN Sustainable Development Goals. Let's now move to the current challenges. The industry can and is clearly playing a role in the transition to a more sustainable world. However, this is a part of a larger transition that needs to involve efforts from all stakeholders. We therefore welcome the European Union's Green Deal, which aims to transform all parts of the economy. From an insurer's perspective, several elements are key. First, as an investor, we need to ensure all EU legislation on sustainability delivers ultimately the right outcomes. This includes improved availability and quality of ESG data for investors. Initiatives such as the Corporate Sustainability Reporting Directive and the European Single Access Point are key. We also need more sustainable assets to invest in. Currently, there is a large gap between the demand and the availability of attractive sustainable assets, and the new issuance of sustainable and green assets is often oversubscribed by investors. In this respect, projects such as the EU Green Bond Standards are key. Not least, we need to address regulatory disincentives to insurers' long-term investment. The recent agreement on the Solvency II review is a positive step, and the Level 2 technical discussions starting now need to deliver the outcomes that are in line with this high political ambition. As providers of insurance solutions, insurers' ability to provide affordable cover depends on strong climate adaptation measures. The responsibility for these measures falls on public authorities and customers, even though the sector has an important role in advising. In addition to adaptation, mitigation efforts are paramount. We will not successfully adapt to climate change without reducing greenhouse gas emissions, and this is everyone's responsibility. This is why we have supported the requirement for having transition plans in the Corporate Sustainability Due Diligence Directive, CSDDD. Reducing greenhouse gas emissions is also vital to ensure that insurance cover remains affordable for as many people as possible. So looking ahead, in a few months, nearly 500 million citizens will vote in the European elections. A new European Parliament and European Commission will be formed, guiding the future direction of the EU for the next 5 years. It is therefore a good moment to reflect on the future of sustainability and sustainable finance. The main pieces of the EU Sustainable Finance Framework, including the EU Taxonomy, Sustainable Finance Disclosure Regulation, Corporate Sustainability Reporting Directive, as well as other tools such as the EU Green Bond Standard, have just been put in place. Companies today are still facing challenges when it comes to implementing the framework. Against this background, in the coming years, it is important to ensure that we focus that the focus should shift towards implementation of rules and assessment of existing rules to see if they work as intended. For example, the European Single Access Point (ESA) project is vital if the ESG data is to be usable and accessible efficiently. Secondly, a holistic assessment of the interaction of the different building blocks of the framework to assess potential overlap, duplicative or contradictory requirements. This is also needed in order to improve the usability of the tool, for example, the EU taxonomy. While definitions are key, investors need stability and flexibility. The focus should be on ensuring that the taxonomy is usable, starting with the E aspect, in order to build on the other aspects, S and G, which are yet to be developed. Finally, the focus should be on key obligations and reporting that will have the most impact, where the benefits clearly exceed the costs, and on ensuring that there is a phased approach to development and implementation of any new rules. Let me conclude by saying that we must all come together, working with policymakers and regulators to make ESG work for our industry and for Europe. We need rules that work and enable our industry to create a sustainable Europe fit for the future. Once again, thank you for inviting me to share my thoughts on this fundamental issue. I wish you all a fruitful discussion on the role of ESG in insurance.